Seasonality is one of the most powerful tools you can use in order to predict financial markets. In this video, we will analyze the gold using seasonality.
What you're looking at in pink, it's the current year. It's how the gold is moving right now. What you are watching here in, let's say, red, it's the 10-year seasonality. It means that we take prices for gold starting from the 1st of January until the end of December for the years 2024, 2025, 2023, 22, 21, 20, 19, 18, 17, 16, and 15, 10 years, and we do the average, okay? Doing the average, we can definitely understand and see on the chart if in a specific period of the year we have a specific trend, okay? And of course, this is something we already used for the indexes in the first lesson of the master. This is something we used for stocks in the second lesson of the masterclass, and today we will use it for gold, for commodities, and of course you can use for all the instruments we will see during this masterclass. Okay, this is something very interesting because, of course, if in a specific period of the year we have a specific pattern, of course, it means in general, okay, in this period we are watching, we can experience that kind of trend, okay? I always do the example with the temperature. If we write on Google New York City temperature, this is a chart where we can see the average temperature for New York City. And as you can see, talking about temperature, which is a very nice example of seasonality, okay, we can definitely say that during January we have a temperature, a medium temperature in New York City, which is below zero. We can definitely say that in July we have a medium, an average temperature of more than 24 degrees, okay? And of course, what does it mean? It means that this is an average temperature, okay? That goes from below zero to more than 24 during summer, okay? It means that we can expect this temperature, but of course, during the year, we will also have drops, okay, of the temperature. But in general, if we have a pattern, temperature will go back to the average, okay? And this is something that or happen also on the stock market, okay? And in general, also with commodities, okay? And this is something very interesting because thanks to the forecaster terminal, we can see on the chart if we have a pattern, but we can also highlight on the chart a specific period, and going a little bit down in the page, we can see which are the statistics. So for example, in this case, we highlighted from, let's say, today until the very beginning of August. And here we can find all the statistics. In this case, if in the past 10 years we have been long, 50% of time we had a profit with an average return of 9.8%. Okay? And here you have all the different years in the same period, as you can see, with the specific statistic for the single year. Okay? And this is very interesting because we can definitely understand if a specific period of time it's more bullish or bearish. In this case, for example, we have only 50% of odd to have a long period, okay? If we switch to short, we can see something very interesting. Of course, if we made in the past a short trade exactly in this period, of course, the winning percent remain 50 because 50 is 50. So even if you are long or short, you have the same winning average. But in this case, something really interesting happened because look, the average return for a short trade in the past 10 years in this specific period, look, this is the average return, 4.2. So we can understand that compared to the long, where we have a 9.8, this specific period we are approaching, okay, is more bullish than bearish.
This video is an extract of an entire masterclass regarding investments and trading. You can find the entire free course here on YouTube. You can find the link in the description.